And look, we're in a fundamental market right now. There are big things happening in the world, and it's affecting the price of everything that goes on in trading. So Alexis was kind enough to offer to come in and do an extra session on fundamentals. So we'll wrap up today with Alexis and the fundamentals. I'll be back after her. Alexis, over to you.
All right, thanks, Paul. And yeah, it's really interesting what's been happening in the market. And I'm just going to give you guys some a couple of tools to take a look at and a bit of background on why we are looking a bit at fundamentals. So I'm just going to give a simple analogy, right? So what is fundamentals? Fundamentals is like the health of an economy, right? And if you think about economies as humans, if humans can get sick, economies can get sick as well, right? But if your immunity is strong, if you are healthier, you kind of recover from the illness faster. So it's very similar to what we are looking for in economic statistics with actual countries, right? The healthier a country is in terms of GDP, interest rates, so the GDP is like the heart, right? It gets the economy pumping. Then you have the interest rate, the inflation, imagine all these like cholesterol levels, etc. So what we're looking at the overall health of the economy. And even though there's an economic downturn or there's a general fear in the market or whatever, right? What is important is the healthiest economies will bounce back faster. The healthiest economies will recover faster. And this is why when we're looking at statistics, we're not just trying to see who is performing better or worse. We're trying to see overall which economy is healthier, so that when things start changing, right, or when monetary policies or fiscal policies like interest rates, inflation, etc., when the doctors start prescribing the medicine, we want to see who responds faster, who gets up on his feet faster, and who bounces back faster, because this will give us the indication. And we are trying to find also the weakest versus the strongest economies. So Trading Economics is a website that I use pretty often. It's a free website, so you guys can go take a stroll through it. There's a lot of data in there. But what I've compiled is I've just pulled out the couple of commonly traded economies that we are looking at. All right, so these are what I am focusing on. I'm focusing on GDP, QOQ, which is a quarterly figure, and of course interest rates, inflation, and jobless rate. All right, so I've categorized them a little bit over here, and just going to quickly run through on what I am looking for the next coming week. So if you look at GDP figures, all right, GDP figures, I put on these three in a more slightly positive area, these 3 or 4, because their GDP is currently it is currently on the high side. Okay, I think the pound goes to the neutral side. My apologies. All right, so actually no, I cancel that. I know why I put the pound there. Okay, so I would say these have a positive GDP. You can see their Kiwi, Aussie, and dollar. The dollar has like a 7% GDP. The Kiwi and Aussie has 3.4%. So they are what considered pretty strong, pretty healthy GDP. And then if you look on the other end of the spectrum, we have the medium range. The GDP is performing only at 1%, or 0.3, 1.6, and of course the lower end would be the 0.3s. All right. Interest rates, right? The highest interest rates currently is held by the New Zealand economy, 1% interest rates, followed by 0.75 the pound, and then of course dollar and the CAD 0.5. And I put the Aussie in blue because the Aussie, strangely enough, seeing the rest of its counterparts increase its interest rates, doesn't have plans to do any immediate increase. What they have instead come out and say that they're keeping an eye on the economy. And if we look at the flip side, look at inflation. Somehow Australia has, I would say, controlled inflation. It has a decent amount of inflation, higher than their normal, but it's not too high comparatively to the rest of the economies. Look at the USD 7.9%, and the 3 great ones, the inflation rate average among the rest of the bigger economies now is about 5.9, 5.1, 5.0, 5.9. And of course, most importantly, these are the unemployment figures. Now, the euro, understandably, is having its highest unemployment figures. It's about 6.8 at the moment. But if you look at the unemployment figures, you will see that the Kiwi, the Aussie, the US, and the pound, all they seem to have balanced it out, meaning that it's not too high, it's not too low. Yeah, it's controlled. All right. So I wouldn't say it's good or bad. I would say it's control. So if you look across the board, what I am trying to find is I'm trying to pick up what is the healthiest economy. All right, and currently my top 3 picks will be the Kiwi, the Aussie, and the dollar. I'm a bit more leaning towards Kiwi and the Aussie because they do have a decent amount of GDP. All right, based on their previous quarter, and their interest rate, is pretty nice. And Australia's unique because it doesn't really need to increase interest rate at the moment because its inflation is controlled. All right, so the figures might not be as easy as comparing more or less. And remember, fundamentals is never about one statistic. It's usually a bigger picture, right? It's a big picture. It's a big chessboard. You have to kind of look at the overview and balance all these factors out. So if you look at the factors, we're looking at 2 countries which have healthy GDP, all right, a healthy heart over there. They are controlling their interest rates. Inflation is a bit high on the Kiwi side, but they are attempting to bring it under control. But most importantly, unemployment is controlled as well. So I'm looking at continued strength in the Kiwi dollar, Kiwi and the Aussie. And I am going to be looking for weakness in the euro and maybe the Canadian dollar. All right. Now, Canadian, I put under the neutral because CAD is a commodity-based currency, meaning that it is very responsive to oil. All right, so this will be a bit more. You have to be a bit careful if you're trading the CAD. Just taking it based on the statistics itself, because again, the bigger picture, there is a lot more factors that go into commodity-related currencies, and this is part of the reason why Australian dollar is doing pretty well as well. All right, so what I'm looking for next week, I'm just going to jump to quick charts. I'm going to look at Euro Aussie, Euro Kiwi. And actually, that's basically all we really need to do, just weakest versus strongest. I don't want to look at too many as well. So if I look at the Euro Kiwi chart over here, all right, you can see the Euro Kiwi, just based on statistics, just based on the current, conflict climate around the area, it has broken and made new, testing new bottom support levels. Will it go lower? Let's go on a weekly time frame. I would say that there is room. Okay, there is room for more downside. We can possibly hit a 2017 low if the conflict doesn't resolve. All right, so we have a little bit more of distance to go. So just because it's overextended over here doesn't mean it's going to reverse. So I know reversal traders going to be finding it very tempting to try to go long here. But let's look at the bigger picture. The bigger picture is the conflict doesn't seem to be going to resolve so soon. It is still a protracted situation. Euro's economic health is not the best, and there is room, right? We are not at the extreme support levels. There is room for more downside. So I would be definitely more comfortable looking for short opportunities at the relevant retracements over there. Similarly for Euro Aussie as well. This is a weekly time frame, and if you look at the weekly time frame, it has made kind of new lows as well. All right, and it has broken through some of the technical levels over here, or is reaching the technical levels over here. But again, it's not at its absolute lowest. 2017 is the previous historical low that we're looking at. So I would see a little bit more downside, but again, be prepared for reversal traders coming in and trying to push the market back up. But in the bigger picture sense of things, I think the probability of that happening is really hard given Euro's weaker economic statistics. All right, so for the euro to recover, it's going to take a big announcement by the government, by Lagarde. Something big has to happen if it is to strengthen again. All right, so this is the overall medium term, I would say, while the conflict is happening. And what I will be continuing looking at is weakness in the euro and taking advantage of that, pitting it against the strengths in the Aussie and the Kiwi. That's all for me, Paul.
Hi, Alexis. Thanks for that, and thanks very much for coming in and doing this for us today. Great to have your input as always, and we're interested to see how some of these fundamental things play out, Aussie, Kiwi, and Euro in particular. To the team, thanks for being here today and sharing as always. Hopefully we've got your trading week off to a good start, and we'll be back next week. I think next week's Ainslie Gordon. Ainslie on oil, gold, and Gordon on stocks. I will check that, but I'm pretty sure it is. We'll be back next Sunday. We'll see you guys same time. Thanks for joining us today, and we'll take care and we'll see you guys then. Thanks, everyone. Cheers, Richard. Thank you.